Hi, and welcome to the Venture and Capital interviews. Today, we're joined by Alan Jones, who's one of the founders of M8 Ventures. And, I suppose for me, I thought it'd be great to do this interview with Alan because he sort of what I love about these conversations is when you've got the ability to represent both sides, as far as when previously being a founder and then also now sitting on the investor side. So, welcome, Alan.
Thanks very much for having me, Steve. It's great to be here.
Brilliant. So just kick off. It'd be great for you to sort of share your sort of personal, sort of story, as I mentioned, as a founder and then to the investor side. I'd love to hear a bit about your background so that sort of people have context.
Sure. So first of all, a lot of people in the tech startup community have heard my founding story before. And second of all, I'm quite old, so it is a long story. So I'll see if I can compact it into a shorter version for today. But basically, I started out my career. So how old am I? I saw the Apollo moon landings live on black and white television in my parents' home. And in the first few years after graduating in the workforce, it was still okay to smoke in the office.
Yeah, wow.
So that's how weird that was. Also, as a graduate, I had an office of my own, and outside my door there was a typing pool full of secretaries because the only people who typed back then were typists, journalists, and maybe police officers, but on manual typewriters, one finger at a time. So that's how old I am. And I started out in journalism and public relations, but my dad brought home a personal computer when I was about 16, and that touched off some kind of nerdy, unexpressed RNA in me, and I started to get interested in technology. So I pretty quickly drifted into technology journalism and became the editor of a computer magazine. Back then, before the World Wide Web, computer magazines had this tremendous power. Well, magazines and newspapers and all traditional media had this tremendous power. But when I saw the internet, I started to fear that actually this might spell the end of traditional media. And so I decided to take a risk and try and make the switch from printing, laying out and publishing magazines to laying out and publishing websites, which back in those days was much more similar than it is today.
Yeah.
Websites were pretty static sorts of things. It was mainly about the layout. And so I was lucky enough to make that switch back then, and went to work for Microsoft for a little while under Daniel Petrie, who's one of the founding partners of Airtree. And after that, went to work at Yahoo, and I was an early employee at Yahoo, and that was kind of my first experience of the tech startup crazy ride. And I guess I got addicted to that.
Interesting. I was going to say, as someone who also founded a magazine, something I'd never recommend upon anyone, and probably people are unlikely to do from this point onwards. But it was interesting for me when we launched. Like, I didn't really have that much of a background sort of in this area when I first launched as a magazine. But it's amazing how much credibility a magazine gives you just because you have one.
Yeah, and you still see people, you still see people in the tech startup community who, if they get their story in the print version of the AFR, will go and buy their one print copy of the AFR for the year when they're in it, and then they'll take a photo of that story in the AFR and they'll send it to their investors on the board and to employees, because that still has that mystique, that credibility.
And as I was saying, don't forget that most important part, that after they take those photos, then of course they've got to share it on LinkedIn as well. Because if it doesn't appear on LinkedIn, it just didn't happen.
Yeah, that's true. And for some reason, it really gets a lot of engagement on LinkedIn. Like I really recommend if somebody quotes you in a story, I'm not sure.
Yeah, so we'll just so Alan just unfortunately dropped out, but we were just talking about LinkedIn and the impact it can have, and of course, when people get featured in traditional media, they're still posting it. So, sorry, you were saying?
I was saying it seems like when you share something when you've been quoted in somebody else's story, whether it's online or in print, if you share that on LinkedIn, it seems like you get a lot more engagement per 1,000 people who follow you than on other social media. I'm not sure how much value that necessarily has in the long term. I think there are a lot of people in most people's audience that spend a lot of time reading and consuming stuff on LinkedIn as if that's their job, as if that's a career decision that they make. But yeah, it definitely gets results. Makes it more popular.
So for you, what types of opportunities are you sort of normally looking at?
Normally, if there wasn't a pandemic recession on, I have a background in media startups, in creative startups, or creative industry startups, and in mobile apps. And so, generally speaking, my previous investments and my interest kind of lie in those directions. So usually stuff which is B2C, sometimes B2B, but usually not enterprise. Usually small to medium business customers is kind of my sweet spot. I started as an angel investor looking for things that I thought I understood for customers who I thought I could be. And gradually over time kind of broadened my remit to look at more and more sectors.
So if I'm a founder and I'm taking you an opportunity, what are the first key things that you're looking at my business to assess whether you, like in that first sort of 30 seconds to a minute when you're looking at an opportunity, what are you looking for to assess whether you want to do a bit of a deeper dive or not?
Well, the first thing is really simple. Do I think I like the person? So that's why M8 Ventures is called M8 Ventures. M8 is short for mates. And I would rather manage a small portfolio of people who I really like to spend time with than a big portfolio of people who I think are dickheads and time wasters, but who I think might work out to be a better, more lucrative financial opportunity down the track. So as an early stage investor, I'm an early stage investor at angel seed stage. Part of what I bring to the table is capital, but a lot of what I bring to the table is my network and my advice. Now, if I'm considering investing in a company, that means if I like the founders, I'm more likely to go further to help them. Nearly all of the things that I can do to help somebody in my portfolio requires some social or professional risk on my part. So they want an introduction to you, Steve, for instance. For me to make an introduction of the wrong person to you is going to hurt me professionally in the long term if I have to keep doing that. Whereas if the person I'm introducing to you is somebody who I really care about and who I really believe in, then I'm going to work harder to make that introduction, and I'm going to be more certain that it's an introduction that you will be grateful for as well. So primarily at the beginning, it's, do I like this person? Do I like hanging out with them? Am I going to take that call from them at 7:30 p.m. on a Sunday night when they're worried about that board meeting on Monday morning? Am I going to work all weekend to try and help them out of a jam that they've got themselves into? There's a lot of that goes on at angel and seed stage. We are, I think, the most active investors in a business. Then from there, I've written about this publicly a few times. I have a external investment hypothesis that I look for, but primarily, I think anybody who's looking for investment at the very beginning needs to bring to the table one or more of four things. And so one of those things is, do you have a world-class team? And a world-class team is ideally a bunch of people who've been successful in startups before. That's super hard to find in Australia. But of course, in Silicon Valley and in Europe and in Asia, we see people going around for the third, fourth, fifth time, and those people become more and more backable. Every success that they've been part of, they don't have to be the founder, but if they're an early team member, if they're within the first 20 to 50 employees, that carries a lot of weight. So a world-class team might mean that you're a PhD in AI and ML, and the startup that you're working in is working on something related to AI and ML. But for me, it's much more about, well, what's your prior startup experience? Because the experience that you gain in most other industries doesn't usually equip you for a life in startups. The second thing that you could try bringing to the table is unique and commercially applicable intellectual property. So unique means it's something surprising that I don't think, that I've come across before, and is less likely to also be worked on by 4 or 5 other teams around the world that we will discover down the track. And commercially viable means, is there something of commercial application here that I can believe in?
And is there anything that the company would have had to have done to be able to show you that it is commercially viable before they've sort of brought it to you? Like, would they have to have sold someone on it, or maybe done sort of in-market testing in some way? Or I've always been curious to know about that at the seed stage.
So it very much depends on the product and the team. If what you're building is relatively simple and quick to build, and you go out seeking investment when you haven't built a product, then I would want to know why you need money to build a product. Because the cost of building technology products has come down 100-fold in the 25 years I've been working in the startup industry. And so I really don't think there is a viable excuse. There's a way to hack together enough of a product to prove your hypothesis that you will be solving a problem that customers are prepared to pay for again and again. So that's the perfect way to prove that the IP has commercial viability. Yeah. But if it's something really rocket sciencey that I need to believe in at an early stage, then it's a little bit more grey.
Okay.
But I would certainly need to believe more in the team if there was less commercialization evidence.
And let's say you've invested into a company, and let's say it's a B2C business, right? What metrics are you then looking for? I said your first metric was obviously the person's. What metrics are you looking for those founders to? Obviously, you're looking for growth rates in different areas. What are the key areas for growth that you're looking for in a company that's in a B2C business and it's right in that early stage?
The growth expectations vary a lot from market to market and time to time. So a lot of it depends on every investor's comparing you against 20, 30 other companies that they might have received a pitch deck from in the last month. And so, they're looking across all those deals and saying, well, if I can only write one check in this investment period or two checks in this investment period, what are the most interesting companies? And one of the ways to be interesting is to be growing fast. Australian startups tend to seem to grow more slowly in the early days. But to give you an idea of the high end of growth expectations, I was listening to Naval Ravikant's podcast today where he was talking about how traction is a proxy for everything. If you can show great traction, if you can show great growth, then nearly everything else is fixable. But traction is the most important thing, and it's also the hardest thing to fake or to sustain in the long term. And he was saying that he doesn't, he expects 10 to 20x. He expects 10 to 20% growth per month in a startup before he's going to seriously consider investing in that. And that equates to 2 to 3 times growth over the course of a year.
Yeah.
Here in Australia, depending on the space and the customer and how well the company is, I would certainly, expect to see something in the order of at least 5% growth month on month. If we're using traction as the reason why I should be investing.
Okay, and you touched on it earlier, and I don't think anyone really explores this sort of stuff too much on these type of interviews. But because you mentioned it, I'm going to bring it back up because I know it from my own experience as a founder. We deal with all sorts of, let's say, firefighting during the day. There's always different problems that we're having, And one of the things that's been a big surprise to me is how much time I spend with my shareholders. Specifically, like not all of them, but some of them, right? And specifically board shareholders, and that also are on the board as well. And it's either creative thinking or trying to solve different challenges or whatever it may be. So I'm curious for you. And I suppose it'd be for other people sort of listening is, what do you see as the main challenges that you're helping companies to solve at that early stage?
Well, growth is one of those problems, and the confidence to take calculated, measured risks is probably the other most common. So a lot of people get into tech startups because they want to create a product so good that customers love it, and customers want to recommend it to their friends, and so on and so forth. And everybody wants to build a product that grows virally,
yes.
And unfortunately, that's super rare. It happens just about often enough that the myth of viral growth continues. Most viral growth, if it happens at all, kicks in at a much, much later stage, and only when the pump has been primed with an awful lot of customer discovery and quite a bit of hacks around the place. And so in the early days, a lot of the time what I'm encouraging founders to do is to get out there and sell the broken, partly missing minimum viable product that they have today. The thing which is a hack together of Trello and Stripe a content management system, like a Squarespace or something, that requires a lot of manual effort to pull together and sell. That is going to help you learn so much more about the product and get the product into a future shape in which it might be able to actually achieve some viral growth. So forcing founders into sales earlier than they would like is one part of that. And in Australia, because most of our startups are pretty capital constrained, that usually means picking up the phone and picking up the email client and actually reaching out to potential customers directly. It usually doesn't mean, let's throw a lazy 50 grand at a Facebook advertising campaign. Even if you've got that, I wouldn't recommend that you do it. But, in Australia, it's much more typical to have to sit down with founders and say, okay, well, let's set a goal. How many more sales leads can we put into the CRM this month? Are you using a CRM? Hold on a second. Okay, let's set you up with a CRM, and then let's come up with a process and a goal so that you understand what all of the investors in the company expect from you in terms of personally growing business.
And do you find you're working with them on building that sales process and those sort of? I know it sounds really basic, but sales is I've chatted about it more recently, but sales isn't something that people talk about too often. So I just wonder if you're helping them with that sales process, or you expect the company to sort of just go out there and try, basically suck it and see how it works.
Yeah. Often the first introduction I get to a founder is to they're seeking some advice about their failing to thrive startup, and oftentimes the problem is that they're very happy to do more customer discovery. They're happy to do more product development. They are happy to do social outreach and go and attend meetups and network. But the one missing thing that they may not be spending time on is sales, and then part of it is fear of sales, which unless you're a psychopath, everybody fears sales at the beginning. That's perfectly understandable. And that extends to, you could have spent your entire career selling real estate, or your entire career, selling pharmaceuticals to general practitioners. But then you take that sales experience and you go and try and sell a startup to somebody, and suddenly you're on very shaky ground because you have zero brand awareness out there in the market. There's no marketing team, there's no marketing budget. The only marketing is the t-shirt that you wear in the business card you give people. So you feel very, very alone. And you're selling something that you certainly don't entirely feel confident in, and you feel like you're eroding your own professional standing perhaps by going out there and selling it. So I meet a lot of startup founders who are selling back into their own peers. Somebody might be a healthcare professional, and they've come up with an idea for a SaaS platform that helps healthcare professionals like them do their job better. And that means going back to those same people who consider you a peer and selling to them, and in particular professions. That's professionally very embarrassing. So I'll often coach people with those sorts of, emotional issues as much as anything. It's often not a process thing. It's often just an emotional thing.
I find that really interesting, because for me, that was one thing for me. I've never had the issue with the selling part. It's more, I think that the real skill has been, how do you, and you sort of touched on this, the consistently adapting of the product to what you're actually selling. And I agree with you. There's no better feedback than when you're actually selling. And then you've got live customers, you understand their frustrations, you understand their problems, and you're always, I think that the part people most forget is I'll spend 90% of time in my own head trying to think about the building of the future. And in that, I have all the different challenges, frustrations, issues that, current clients have that I want to try and solve going forward. And for you, my next question would be along the lines of, when you see a company go through that and they figure out their sales process and they start to get some traction, what are you encouraging them about? Okay, what are your first hires? Who are the first people that you're bringing on? How are you bringing them in? How are you starting to build your culture inside your business? Because that's really, at that early stage, there won't be any of those processes there. What's typically your guidance around that area?
Yeah, so hiring kind of falls into a couple of buckets at the early stage. And so one very common bucket of hiring challenges is around finding a technical co-founder, finding somebody to lead the software development function. So a lot of Australian startups are software startups. And yet, we are in an economy that has very few experienced technologists.
Yeah.
And the experienced people that we have, typically work in big corporations, using a different tech stack with a different time frame to the sort of work that they do, and so that they're just as poorly suited to startup life as anybody else. So for a lot of founders, they might get something built offshore, some sort of minimum viable product, and get started and get some traction with that, or they might be able to successfully hire a developer or two, and then feel like, well, I need to give these people some engineering inspiration. They need to be led by somebody who understands what they do, not just somebody who's gone, I hope they've finished doing the next feature soon. Somebody who can actually look at the matrix of code flashing past on the screen and have some insight into how to do that better. So that's a very common topic of conversation. And the challenge with finding a technical co-founder is that all the great potential technical co-founders in Australia already have something better to do. They have no shortage of work. They have all the skills that they need to build their own tech startup if they've got an idea. So, why would they come and work with you? I think the thing to remember there is that most engineers are largely motivated by solving interesting problems. And there's kind of two dimensions of interesting. One dimension of interesting is solving a problem that nobody's solved before to X level of satisfaction. Like, there are broken ass solutions for that, but there isn't really a graceful solution for that yet. And the other dimension of satisfaction is when you can solve a problem for a lot of people at once. So if an engineer friend of yours walks past your microwave oven and the clock is flashing, they can program the clock on your microwave so it's telling the correct time, but they're solving a very small problem for one person, and you may not care about that. So, what makes a problem interesting is if they're perhaps solving that for 100,000 people around the world at once, and that problem matters to a lot of people. So I think the biggest challenge is finding a way to make that potential technical co-founder find you and fall in love with your mission, and then approach you to see if they can contribute to what you're working on. That's a whole different mindset to, I'm going to put an ad on Seek and I'm going to take a look at the applicants to that, and I'm going to see if I can hire one. It's a much, much longer return on investment, but the way to do it is to start actually writing and sharing on all of your social channels, on a company blog. You probably don't have one yet, but start to talk about the mission. Start to talk about, everybody's natural instinct is to talk about the things that you're confident of, that you're certain of, the problems you've already solved. And that's not attractive to an engineer. An engineer wants to find unsolved problems. An engineer wants to hear about the things that you're not certain about, that you're scared about, that you're worried that you won't be able to solve without their help. That's what's motivating them. So unless we're able to be transparent and open and share how difficult this journey is, we're not going to find that person, or at least they're not going to find us. But I highly recommend you start that way.
And if you do find them, how do you keep them motivated? Is it by consistently coming up with new problems?
Yeah, well, so the first thing is you've got to make your problem interesting. So correct. If you sit with an engineer and say, the problem that we're working on is increasing the net revenue of a big five Australian bank by 2 basis points next year, that's not going to motivate an engineer. That's not an interesting problem. But if you can deconstruct the business problem into interesting engineering problems, then maybe we have a stab at that. So if you can understand your own customers' current products that don't work well, and are able to explain a little bit about why the customer hates those products, then you ought to be able to leave it up to a good engineer to come up with their own ideas about the sorts of ways that you might solve that problem better. So working with a great engineer is a collaborative process. It doesn't matter whether you give yourself the title CEO and give them the title senior software architect or whatever you want to give them. At the end of the day, great work with an engineer is a collaborative process where you say, well, here's the problem, and here's what I understand about what might make this problem interesting from an engineering perspective. But, I don't know, where we go from here. Tell me what's arising for you. What do you think is interesting about this problem? How do you think we might go about solving it? Then the other, very commonly talk to founders about how they're having trouble filling particular roles. And then if we go into their average performance over hiring previous roles in the past, generally speaking, they will say that they've been unhappy with the performance of their hiring across the board for however long it's gone. There's two ends to that spectrum. You can get lots of applications from people who are poorly qualified and aren't suitable for the role, or you can wait forever and ever and ever and ever to receive, just one application, but it happens to be the perfect person for the role. And it's very difficult to find the right point on that spectrum that suits your needs right now. But I think despite the claims that you can have both, I don't see a lot of evidence that particular problem has been solved very well. So the best that we can hope for. Sorry,
I was going to say for us on the talent side, it's to me, it's definitely got to be a conscious decision. And I'd have to say we actually brought in someone on the talent side to actually really help us, because there is a site there. Like, what I was surprised was to learn that there is a way to actually hire by science. And I was like, that really was interesting. Now, it doesn't mean it can be 100% accurate, but at least for, how can I put it? All of us are different. And when you can discover your way of operating and an ideal way of how to manage different individual people and their communication style, it definitely makes things a lot easier. And where that comes into benefit from our perspective was that we started this process in July last year. Come COVID time, when it came time to pivot our business and sort of focus everything around virtual, it was basically done across 2 days, and we were executing within 3 weeks of that. And that came back to hiring decisions made in July last year. And I was like, so now going back, it's one of those things, now that we have that data and process, it's like, I can't imagine not having it.
Mm-hmm. Yeah, that's cool. That's really cool. I think the hack in the short term for most early stage startup businesses is to screech the dial all the way over to the end of let's get a large volume of applications, but then let's put somebody in that process to help us screen those applications. So then we only have to teach one person what the right candidate looks like, and then that person can go out and sift through those applications to find out. Now that's going to cost money, whether that person's inside your team or outside in a recruitment firm.
But hiring incorrectly costs more money.
Yeah, and if your recruiter keeps sending you dubbed candidates, that's your fault.
Yeah,
right. They haven't been properly briefed. They don't understand your business. Invite them around to hang out with your team for a couple of hours. Buy them lunch and shout the team lunch as well, so they can get to know a little bit about your culture. And hire for diversity. So people can go and work at Westpac, or they can go and work for your little bitty startup. So everybody who applies to work at a little bitty startup is taking a huge risk. The least you can do is recognize the risk that they're taking and take some risk yourself. Stop trying to optimize and try to hire what you imagine to be the best possible person for this role, and instead accept a few misfits into the mix. Give a few misfits a chance. They're taking a chance. You should take a chance as well. You may find over time that you end up with a much more diverse and therefore much more resilient and a higher performing team, because the data shows very clearly that diversity is a winner, right? And it builds higher performing, more efficient teams. I said before about how my first screen in investing in a founder is it has to be somebody that I like. The danger in applying that as an employer is that you are quite likely to end up with a team that is a monoculture.
Yeah.
Because we all like people like ourselves.
Yes, correct.
I like obstacle races and trail running and body surfing and particular kinds of music. Yeah. People I like. First pass is going to be people who like me. So I've also got to throw into that mix. Well, who are the misfits that I'm adding to that mix? I may not immediately go, oh, damn, I like this person. But if I can train myself, I can learn to go, this isn't somebody who I have anything in common with, but I'm looking forward to the opportunity to get to know them and to come to like them over time.
And just as I suppose as a final question, this environment obviously will, how can I put it, there'll be people that will either be underemployed or will be aware that, they may not have a job shortly. And one of the areas, like it's obviously come across in a few of the podcasts, that there are still startups that are hiring. There are still companies that are thinking about their hiring process going forward. What would be your advice to founders when they're sort of thinking about their sort of hiring strategy over the next few months? If they are hiring.
In my experience of several recessions in the past, so I lived through the recession that Paul Keating said we had to have. I lived through the dot-com crash, and I lived through the GFC. And one of my observations from those periods has been that the value of trust goes way, 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 way up. So how do we establish trust? We do what we say we're going to do. How do we establish trust? We say to people, this is what I'm going to do. So anytime we enter into a relationship, whether it be a potential employee or a potential investor, a potential customer, the first thing that we have to do is we have to have the courage to be really explicit about what we think we might be able to achieve for that person in very concrete terms. I'm not going to come to you and I'm going to say, I'm going to raise the awareness of your business in the business community. I'm going to come to you and I'm going to say, I'm going to close you 5 sales leads worth at least $10,000 per annum contracts,
So what is the specific value outcome? Yeah, that makes sense.
Yeah, exactly. And then, you don't need to make that an ambitious goal, but you have to make it a concrete goal, and then you have to execute on that. That has to be a no-fail goal for you, because with the trust that you earn from executing on that first no-fail goal, you get permission to strive for a little more. So whether that be the employer you want to work for, whether that be the customer you want to win, whether that be the investor you want to get across the line, you want to prove that you're an operator. You want to prove that you get stuff done, and it can be small little bites of the cherry at first. To get you the permission that you need to go further and further and further. So you don't need to provide value to a company by being a full-time employee. You can approach a company and you can say, I think I understand enough about your company that I could execute on this little bitty project for you. It'll cost you this much for me to do that, and it will take this much time. Would your company be interested in that? That might be a way to get started, just as a freelancer, just with your own ABN, see if you can prove to a company that you're worth something to them, that you can add value, that after your invoice has been paid, there's still enough for them to add to their bottom line.
I was going to say, it'd be an actual dream for someone to come with you, that pitch. The shame is when you're a founder, you have people pitching you most of the time, and they're expecting tens of thousands, and there's no sort of defined outcome from what they're typically pitching you, which is a shame.
Now, the most common mistake is that people tend, in their own fear and uncertainty, tend to pitch that as something that they're prepared to do for free.
Yeah.
Now that's a really big mistake.
Yeah.
Everything has a value, and if you set the value at free, then that doesn't increase its value to the company that you're pitching that to.
Agree.
If we had the bowl of M&Ms analogy is a favorite of mine. When I meet with somebody in person and we're talking about whether or not you should offer a freemium model, I'll say bowl of M&Ms in the middle of the table. If I tell you the M&Ms are free, how many are you going to consume? You're probably going to have a few more than you would otherwise. Now, what if I say all of the colors of M&Ms are free, but the brown ones are 5 cents each? You're going to go picking through the bowl and you can pick out all the colors that aren't brown. We would all do that. Right? So the moment we put a price on something, it changes people's behavior, and it can also change people's perceived valuation of what it is that we're doing for them. So never offer your services for free.
It's amazing. It's amazing how many. I was going to say, it's amazing how many founders we've sort of come across that are willing to, that don't realize at some stage they have to make a financial transaction, that they'll keep on trying to provide stuff for free, for value add as part of, and that there's all sorts of different justifications for it. But at the end of the day, until you actually make a sale, that's when the game starts to really be played, because it's very easy to have people use stuff for free. But when you actually have a financial transaction involved, then you get the real sort of thoughts, feelings, perceptions, frustrations, all that sort of stuff.
Totally. So I'm not sure how deep this recession will go or how long it will last. My general feel, though, is that it will be deeper and longer lasting than most of the pundits, and certainly the government ministers are telling us it's likely to be. So I would say prepare for that and focus on establishing trust with everybody that you deal with. You're going to need their trust in the times to come. You're going to need to be able to fall back on that and go back to them and say, this didn't work out. Can I have another try? But you only get that second chance if you've established that trust in the first place.
Great advice. Well, Alan, thank you very much for your time. Really appreciate it. It's great to have you to do the interview with you. Thanks
for the opportunity, Steve. You had some really great questions that are really interesting to think about that.
Thanks, mate. I definitely want to do this again as a follow-up. What I think is going to be interesting is to do this sort of 6 months from now and to see how this sort of plays out, especially given that, if you're looking at September, October, that the JobKeeper program will finish, which for me is when I feel when you'll truly start to see where things are at for most people. So I'm curious if, we do this 6 months from now, what's the environment look like? How's the investing habits? What different things have changed? What trends have actually come on? That's what interests me for sort of going forward.
That would be really interesting. I feel like we've only skimmed the surface of that today.
Agreed. Thanks so much, Alan. Much appreciated.
Thanks a lot, Steve. Good to talk.
You too.